Hello and welcome back to the House of Trade. I'm Justin Banton and today I'm joined with...
Safia?
Would it be joined with or joined by?
Joined. I'm joined by Safia.
Yeah, I think it's joined
Yeah.
by, not joined with. Anyway, we're not here to talk about the English language or grammatical terminology and the lexical prowess of the English language, because my name's not Shakespeare. I'm here to talk about crypto and the amazing world of crypto and what's going on at the moment. If you haven't
Amazing.
seen what's going on recently,
It is a
well,
bloodbath.
it's been an absolute bloodbath in these crypto markets. People losing their shirts, people getting issued with breaking up notices from their spouses because they bet all of the house on crypto, funds being liquidated, people saying the end of the bull run is here. But although there is red everywhere and there's blood in the streets, hopefully you can find a rescue platoon right here on the House of Trade, because we're going to be talking about the crypto bloodbath and we're going to get started with a few questions from Safia.
Yeah. So my first question is, what is happening in these crypto markets? And is the bull run over, or is the cycle just changed?
Well, that's a very good start to the questions, to be honest. Those are the questions on many people's minds, I'm sure. Is this crypto bull run over? I mean, it would make sense for it to have a breather, a pause, because it's gone up so much and nothing goes up in a straight line forever. They normally say there's a maxim, an aphorism in markets, that markets climb a wall of worries and they plummet down escalators or something like that. Or they go up in step fashions and then they plummet down a mountain. I butchered that phrase, but it's something along those
Absolutely
lines.
butchered it.
But it's absolutely true. That's what happens with these markets. And crypto has been on a slow grind upwards. And that makes sense, right? I mean, we've literally had the commander-in-chief. Some refer to him as the orange one, or our overlord, the commander in graft, Donald Trump. He's literally been the cheerleader for crypto since he got into office. At no other time in any of the Western developed economies, not that that means anything, because I don't believe in Western or Eastern. It's a cold word terminology that's derived from the British Empire, who misnamed places like the Middle East, and we still use those outdated terminologies now. But that's an aside, I
I
digress.
was just reading about that.
Even no, so we shouldn't really use that terminology, but nonetheless, we digress. We could maybe have another podcast about that. But we've got a president who is literally flying the flag for crypto. We've got banks that once called crypto a scam now provide an institutional client services for crypto. We've got nation states like El Salvador denominating their sovereign reserves in Bitcoin. We've got FOMO on a level that hasn't been seen in these markets in a long time. We've got the legitimization of Bitcoin and crypto all across the spectrum of risk taking. So, why are we here now? Well, obviously, Bitcoin is firmly established. If you were one of the early adopters of Bitcoin, you had to endure people calling you a lunatic, crazy, a drug dealer, some kind of reprobate. You only use crypto because you're trying to get away from your crimes and your insalubrious past. But now it's legitimized. But why is everything falling and plummeting now? Well, nothing goes up in a straight line forever. And the crypto market is so interrelated and interwoven with normal traditional assets or TradFi that it really is centralized in a way that crypto was never really made to be centralized. If you're one of the early adopters of the technology of crypto, you know that one of the main reasons, the monolithic reasons, which made the bastion of crypto so alluring and attractive to people, was the fact that it was decentralized. It was created to get away from the fiat system of currency, to not be in control of the bankers or the central governments or the central banks. But now it literally is held by those people. So the normal raison d'etre of Bitcoin as being an anti-establishment play no longer exists. So that comes with a few sacrifices. What does that mean? Well, that means if traditional finance goes down, crypto is going to go down too. And that's what we're seeing at the moment. The dizzying heights achieved by AI names, NVIDIA, Intel, Microsoft, Apple, the fondly named FANGs or the Miracle 7, it eludes me now, but you know what I'm talking about. The Magnificent 7. they have been on a bull run like never seen before. It just reminds me of the dot-com bubble. So with the dot-com bubble, I'll give you a little history lesson because you were a wee bane when the dot-com bubble happened. When the internet, okay, which is what you're using now, was first invented, it was a military project. It was actually started by a man that actually visited the school that you went to, Satya,
I
and
didn't.
he invented the internet as a military naval communication project. Then it got a few years later, it got co-opted, and people realized, hey, we can not just communicate between institutions; we can communicate between everyone on the world. We can share processing power and computer power by joining this worldwide web and this network of technology. Now, lots of smart people started to realize there's lots of money to be made in this burgeoning infrastructure. So they started building out all of the plumbing that's required for the internet. And that led to the dot-com expansionary bubble. There's another analog, which is like the train bubble. Back in the day, when the frontiers were being conquered in the Americas and the bad old American Indian was being vanquished for his land for doing nothing wrong, there was a real stock market bubble in trains because that was the new technology. Whenever there's a new technology, there's always a related asset boom in that. And it's nothing different to the dot-com bubble, and it's nothing different than we're seeing now with the AI bubble. How do we bring that back and relate that to crypto? Well, now that crypto is treated as a respectable asset and it's traded on the global exchanges, if stocks and equities go down, crypto goes down too. So now people are starting to question the AI narrative, just like they questioned the dot-com narrative. The AI narrative is drawing in so much capital, and companies are funding each other. They're robbing Peter to pay Paul. It's like me and you, Sapia, having a business. And I'm like, hey, Sapia, I'll give you £100 if you buy products from me. And then you're spending my £100 on my product. And then I'm giving you another £100 just to buy my product. You're using my product. You're lending my product out. I'm giving you, it's like a circular thing. And it
Yeah.
all takes only one card to go wrong. So people have been questioning these cards in these crypto markets and these AI markets. They're saying, hey, does it make sense that OpenAI, a private company, has a valuation in the trillions? Hey, does it make sense that we're giving Elon Musk £1 trillion bonus? Hey, does it make sense that Nvidia are buying chips from OpenAI, who are investing in AMD, where the government's taking 10% stake in Intel? Does it make sense? So all of these little fractures and these fissures occur in the market, and they drag things down. Now, if you've ever traded a plummeting market, you realize the main thing is a dash for liquidity. In times of stress, cash is king. And if you're faced with the risk of ruin, you want to sell everything you have that is in profit, your stocks, your gold, and your crypto. Now, crypto is a way more volatile asset than stocks, which means it feels the pressure way harder than traditional assets do. So why are we here now? We're here now because there's a general risk of sentiment in the market. People are questioning these theses, and they're also wondering, hey, if AI can fail, then why not crypto as well? I'd rather be out of the market than in the market. And I think that's what's going on.
Yeah. Um, I know you were talking a lot about the government and all the different, yeah, but how is the Federal Reserve affecting this stuff as well?
The Federal Reserve, they were once invented to like control the markets and to protect banks. People think the Federal Reserve, it has a dual mandate, and the dual mandate is to keep inflation in check and to keep consumer prices in check as well. But the real reason the Federal Reserve was started is to protect the banks from failing. Now, the Federal Reserve is taking on an increasing role in the economy and the global economy and the importance of financial institutions. They set the price of money, and any institution who sets the price of money has an outsized responsibility and an outsized dominance on the asset prices of the world. Now, the Federal Reserve's main policy tools are not just speaking to the market and directing things in a psychological way, but also by adjusting the federal funds rate, which is essentially the price of money, how much it costs for banks to borrow money, how much it costs your mortgage, your student loan, your car loan, all of that. It's all set by the Federal Reserve. They are the bank par excellence, and everyone references their borrowing rates from the Federal Reserve. So why is the Federal Reserve so important in crypto? Well, as interest rates go down, people search for assets to give them higher rates of interest. So when it goes down, people say, hey, it's no longer wise for me to keep my money in a bank because the interest rates are going down. Therefore, I'm not making a lot of money on my capital. So I'm going to go further out into the risk curve. If interest rates are 1%, maybe I can get 4% from investing in a stock. Hey, maybe I can get 7% from investing in crypto. So there's a direct relationship between lowering interest rates and higher asset prices. And because Bitcoin is a high beta asset, which means it doesn't track the stock market 1-to-1, but it tracks it maybe 2 or 3-to-1. Any return in the stock market represents an outsized return in Bitcoin in relation to normal traditional assets. So how does the Federal Reserve play into it? Well, by directing policy lower, they send a signal to the market that it's time to buy assets. Now, the reason why the Federal Reserve have influenced Bitcoin recently is because the whole market is begging for them to lower rates. They're begging. Donald Trump is even lambasting the Federal Reserve chairman, something we've never seen before because it's a real impediment on financial independence of the Federal Reserve. He's trying to get Lisa Cook, which is one of the governors, fired. He's trying to get Jerome Powell to leave office early. Steve Moran, who is his like commander, I don't know, aide de camp, his most trusted acolyte and disciple into the Federal Reserve. So essentially, the market is worried that interest rates aren't going to go down fast enough, which means Bitcoin doesn't have the same valuation metrics as before, which means we need to readjust our Bitcoin price, which means simply lower Bitcoin price.
But with Bitcoin, maybe we've just come too far too fast. Isn't this just a natural reaction to an extremely overbought market?
I would think that's a very astute observation. I mean, anything that goes up this fast, there's going to be a backlash. There's going to be a reversion to the mean at some point. And you could actually view this as a healthy correction. If you are a long-term holder of any financial asset, you actually want your asset to perform in these healthy ups and downs, these undulations. You don't want it just to be in like a North Sea bubble, which was another stock that you probably don't know about. Back in the day when they were funding voyages all around the world. The South Sea Company, I believe they went around the world and they did all of the empire's ills. And they had a huge bubble. Anyway, nothing goes up in a straight line. And it's probably healthy for us to have this correction. I don't think there's anything inauspicious to think of. You want your market to have these ups and these downs. And if you're a long-term holder, it all sums out to zero, right? On a long enough time frame, every single bump sums out to zero. So I don't really see a problem. In fact, if I was a long-term holder of crypto, which I am, I welcome these kinds of these changes.
Yeah. And why do you rate the importance of the TGA and liquidity in these markets?
Well, the TGA is something that lots of small retail investors like us probably don't really know about. It's a good question. The TGA is the Treasury General Account, and it's essentially the checking account of the government. So in the recent shutdown in America, the longest ever in history, 43 days, where the Republicans and the Democrats couldn't agree on policy, which, I mean, I kind of understand why they couldn't agree. It represents huge hikes in healthcare costs for the average man in America. But in the recent shutdown, nothing was going on in government. It's like shutting down the workforce of an entire country, the business of government, no economic releases, no one getting paid, no food stamps being distributed, even the military not getting paid, airline workers, traffic controllers, air traffic controllers, all of these things shutting down. Now, because they were all shut down, all of the money that the TJs managed to distribute to those aforementioned entities was just stacking up, which means when the shutdown ends, that has to leave the exit valves really quickly. Where does that liquidity go? It goes into the banks and the back pockets of the American citizens. What are they going to do with it? They're going to go out and they're going to spend. Imagine not being paid for 2 months and then getting 2 months' salary all at once. Not only do you have a lot of bills to pay, but now you have a lot of extra discretionary cash. What's going to happen to that cash? Well, it's always the same thing that happens. People are going to use that cash not only to invest and speculate, but to buy things in the economy. And that's why the TGA is probably one of the things that can keep this bull market going. $1 trillion are in the TGA account. Imagine $1 trillion reaching the economy all at the same time. People are going to be flush with cash, and it could be the reason why crypto takes its next up leg higher.
I'm not really sensing a feeling or anything of euphoria in these markets at the moment? Is there fear on these streets?
Um, you know what? There's a famous phrase: when there's blood in the streets, it's time to buy. And also when the tide goes out, that's when you start seeing who's swimming naked in these markets. But you're right. I don't see any euphoria. I don't want to see many of these old men naked either. Don't worry.
Neither do
When the
I.
tide goes out, it was a bad image. But when we're at this stage in the market, I agree with you. I don't see any FOMO. I don't see any frothiness. I don't see people selling their cats and dogs to go and buy crypto. I don't see the crypto bros on the internet saying, "Oh man, laser eye Bitcoin, man, you don't understand. You don't understand, bro." I don't see it. I mean, I think these cycles have elongated. I think the cycles have changed. I think the buyers and the buying dynamics and the typical characteristics of the average buyer have changed. They're way more respectable. You have institutions, you have pension funds now allocating to crypto. So you don't have the same crypto tech bros or the young boys or girls who are in their mums and dads' basements, like trying to get rich from pumping doo-doo coin or something like that, right? It's not the same profligate spender. So I don't really see it either. I don't see euphoria. I don't see FOMO. I don't see blind panic. So that's indicative of a healthy market. So if you're out here suffering these drawdowns, yeah, Bitcoin's down 5%, Ethereum is down 7%. A lot of these doo-doo coins are down 20%. But hey, when you buy SHIT, you're probably gonna get it in the face, right? If you F around, you're gonna find out. So you have to be careful. It's just another lesson to allocate correctly. But no, I think you're right. There's no euphoria. And at this point, there's no FOMO. So I think it's a healthy correction.
But we're talking about at this point, where do you see the cycle heading next?
I think the cycle where it heads next is very much dependent on what happens to the stock market. If interest rate trajectories go down, I think if we get an interest rate cut in December, I think we're going to be back on track for markets pricing in ever higher, more ebullient equity prices, which is going to bleed over into our equity and into our Bitcoin and crypto valuations. I think we're going to see a rally into the year end. And I don't think we are imperiled or endangered because the narratives that are pushing asset prices up have not changed. The narrative has not altered. And the reasons why people are buying assets, hard assets, scarce assets, assets that can't be printed, have not changed. So in short, barring something cataclysmic happening, barring the Federal Reserve saying, hey, we're actually going to raise rates, barring Trump being impeached or leaving office, and the next administration saying, hey, we hate Trump, and therefore we're going to change everything in terms of the legalities of crypto, I don't see anything cataclysmic or apocalyptic happening for crypto. So in short, manage your risk, manage your positioning, don't over allocate, don't get too exuberant, avoid FOMO, and you should be okay. But as always, when signing off of the house of trade, we have to say this is not financial advice. Think of yourself, think of your family, think of your cats and dogs. You need to sell them. If you are finding it hard to sleep at night, Safia, it probably means you're over allocated. It probably means you have too much risk on the table. If you're finding it difficult to get through the day without checking your phone and your asset prices 100 times, it probably means you're too invested. So just take that in mind. But for now, I've been Justin Banton with the House of Trade, joined by
Safia?
and we will see you on the next time. Ciao for now.